Good morning, everyone. It's your mentor, Remy Vince, the only mentor that's killing it. So, on today's video, we're actually going to be covering a very important topic, which is mostly known as imbalance, right? The reason why I say this topic it's very important is because we actually need the market actually needs to be balanced in order for the market to move. So, every time when there's an imbalance in the market, we know that the market has to go back and close that imbalance. It's like open voice in the market that the market still has to go back and close before actually continuing with the trend, right? So we're gonna start off with what is an imbalance, right? An imbalance in forex trading refers to a situation where there's a significant difference between the amount of buy orders and sell orders for a particular currency pair. For example, if there are more buy orders than sell orders for a particular currency pair, there is an imbalance in favor of buyers, right? Meaning every time when the market is trending up, that means there is what do you call this? There are more buy orders than sell orders, right? That means the buyers are actually winning, right? They're actually winning over the sellers. Let's say if we had like 100 traders, there's like 80 of traders that executed with like long positions, and there's like 20% of what do you call this, of traders that are still executing sell, hoping for the market to go down, right? So just know every time when the market moves, right, in a particular trend, I meant the market moves in zigzags. I'm always gonna repeat that, guys, in each and every video that I actually cover, right? The market moves in zigzags, right? And every time when the market moves, remember it forms what we call an impulse correction. Impulse correction, impulse correction, impulse, then it has to give us a correction, right? So if the market is actually in favor of the buyers, the market, every time when the market is actually going to be like giving us what we call an impulse correct, an impulse movement, the market will always leave like spaces in between the candlesticks, and those spaces in between the candlesticks is what we call an imbalance, right? I'm gonna show you guys on the real chart example, right? And I hope you guys actually understand this, right? So, before we actually go to the real chart examples, right? Just to show you guys what is an imbalance in the real chart examples, right? So there are two concepts that I actually need you guys to be actually familiar with, right? We have what we call an efficient market, right? Then we also have what we call an inefficient market, right? What is an efficient market? An efficient market is when there's like low volume in the market, right? Let's say the market actually moves, but then the market like doesn't leave any imbalances or any spaces in between the candlesticks. That is when the market is inefficient, right? So what is an inefficient market? An inefficient market is when there is high volatility in the markets, and actually like there are a lot of numbers of a particular trend, of maybe let's say in a bullish trend, right? We had a lot of buyers than the sellers. The market would just move impulsively upwards, and actually leaving spaces in between candlesticks. As you can see, from this week till this week, there's a space in between the candlesticks, right? And that space is what we actually call imbalance, or maybe you know it as a fair value gap. Still the same thing, but then they work in a different way. But then I'm not gonna touch on what is a fair value gap. They're still the same thing. They work similarly, but they're not really, right? So this space is what is called an imbalance, right? So from now on, guys, what I'm gonna do, I'm just going to try to keep this video short and very straightforward, right? So from here, we're actually going to be moving to the real chart example, so that I can actually show you guys what I'm actually talking about, right? Okay, guys, so on this real chart examples, I've already just actually marked out examples of what we call efficient market, right? And then also an example of what we call an inefficient market, right? I just need you guys to actually put your focus on this explanation so they can really understand, right? And remember, I told you that, guys, every time on the like at the end of the correction, the last candlestick with the longest wick is where you will find what you call your demand or your supply, right? Let's say this zone was actually changing, like this was our highest low, highest high, highest low, highest high, highest low, highest high, highest low, right? I told you, like, at the end of every correction, you actually find what you call your demand or your supply zone, right? So as you can see right around there, we had what we call a demand zone, right? And I'm gonna need you guys to just hold on to that as I'm going to explain in like efficient market, right? So just just in between those boxes, right? As you can see, from this red candlestick to this candlestick to that candlestick and to all these candlesticks, there are no spaces in between the candlesticks. That means this market is efficient, right? That means price is balanced. Like there's no inefficiency, there's no reason for the markets actually come back to this zone. There's no a reason like for the markets actually come back to this zone, right? But if we can actually like spot right around here, there's spaces in between the candlestick. There's a space between this candlestick and then this 1 week, right? As you can see, from this week to that week, that is why the market actually bounced off right around there, right? That means there were buyers that actually entered from this fair value gap, or what you may call it inefficiency or imbalance, right? There were buyers that actually placed their buy orders right around there, and their stop loss are actually just below this other block right around there, right? So the market still has to come back and take out those buys, right? So just to keep this thing very simple and straightforward, so that I cannot actually so that I don't actually confuse you guys. Look, also here's a second example, right? Like between all of those candlesticks, there's no spaces in between. This means that this price is efficient. So what do you actually want to be looking at? Like what do you actually want to be looking for in the market? We actually want to be looking for efficient, like inefficient markets, right? As you can see, there was a space in between this week right around there and this week right around there, right? The shadow, I don't know what you may call it, the shadow or the week, this week and this week, right? And also right around here, let me just also mark it, right? Right around there and also right around here, right? So this simply means that the market was actually imbalanced, right? There was a large number of buyers than sellers, right? That is why like the market actually pushed impulsively, so impulsively, right? It took the markets a lot of money to actually make this move, right? So people that actually entered with buy orders right around there, they actually made real money. They actually made money, guys. So remember, I just want to show you a very nice technique that you can use for your entries, right? So using imbalance, order block, and inefficiency, or whatever that you may call it, right? So from here, the market was actually trending down. From here, the market was actually trending down. The market was actually forming like what we call a lower high, a lower low, lower high, lower low, a lower high, a lower low, right? Then it happened, then the market shift the structure by breaking this lower high, right? Because this lower high is the lowest high that actually generated this lowest low, right? So the market actually broke structure above to the upside. Then after that gave us what we call a retest or mitigation to this order block right around there, right? So from there the market actually broke structure again, then went up impulsively and actually leaving us what we call an IMB or imbalance right around there, right? So we had two large imbalances. We had an imbalance that starts from here till here, then another one from here till D, right? And every time when the market leaves this kind of huge space in between, the market has to come back and close it. The market has to be balanced before actually continuing with the trend, right? So as you can see, the market actually went up, and then from going there up, the market had to come back down to this order block right around there. As you can see, the last candlestick with the longest week is what I've marked. And how did I know that this order block is actually valid? By actually spotting this two fair value gap. So every time when you spot an order block or your supply or demand, you like there has to be inefficiency in the market, whether below or above, guys. There has to be inefficiency. That means from here I could have entered with the long positions till this high, and this could have been a very winning trade, right? We're just gonna go and do like a short example, right? Because this is like a long example, right? So that you guys can actually understand what I'm actually talking about. So guys, we are here on the Euro JPY, right? On a 5 minute chart, just to actually show you something, right? So from here, the market was actually trending up, right? From here, the market was actually trending up, right? Forming lower lows and lower highs, impulsive and corrections, right? So as you can see from here, guys, the market actually broke structure, came back, broke this low, right? Gave us what we call a market structure shift, right? Broke this low with this nice movement. And actually, okay, let's actually mark this low as what we call a market structure shift or a change of character, right? The market broke structure to the downside, and I don't know if you guys can actually spot the fair value gap or the imbalance or the inefficiency in the market, right? So obviously, when the market actually gives us a market structure shift or a change of character, we have to have an order block. The last candlestick with the longest week on the correction. So since we're on a low, since we're on a what do you call it? Since we're on a downtrend right now, because the market actually broke structure around there, right? That means the market is no longer willing to go up. That means the sellers are now entering the market. That means the market is changing character from being bullish to being bearish, right? So remember, every time when we have a market structure shift, we have to have what we call our support or our demand, whatever that you may call it, right? So, or our supply zone, right? So the last candlestick on the correction was this one that was unmitigated, right? And this zone was actually valid. Why do I say that? Why do I say this zone was actually valid? Is because there was space in between this candlestick. Okay, let me just do this candlestick and also this, which is where we had what we call an inefficiency. This was our inefficiency, guys. So this order block was actually valid because we had inefficiency or imbalance right around there. So the market had to come back and close that imbalance before actually continuing to the downside. As you can see, we could have entered both the sell right around there and actually placed our stop loss just above this this high, right? So we could have like targeted this low right around there. And as you can see, we could have entered right around there, but our stop loss was actually safe and we were not actually kicking out. As you can see from there, the market just wanted to take out the small accounts first. Then the market actually went down. Look. Our take profit could have been hit just right around there. Our take profit just could have been hit. So, guys, it's your main tool, Romeo Vince, the only mentor that's killing it. And I hope everybody clearly and understands this concept that I'm actually explaining right around here. All I'm just trying to do is to help my brothers and sisters. So, it's your main tool, Romeo Vince, the only mentor that's killing it, signing out.